Hi everyone, I am CSLB Poshi, Indirect Tax Expert at ClearTax, and today we all gathered here to understand about the changes which have been introduced in the recent budget. So we'll talk about all of these changes in today's session. But before that, I just want to check if you all are able to hear me or not. So if you are able to hear me, just say hi on the chat box. Great. So it seems like everyone is able to hear me. So with this, we'll just start our today's session, which is on the Union Budget 2023. We are going to have a detailed analysis like what exactly was introduced and how this is going to impact our businesses and what exact changes we have to do once this get notified. So here, the first and the foremost change is in respect of the ITC on the CSR activities. So let me first cover like what exactly were the CSR activities and why this change is here, why they have introduced this change over here. So let's understand about all of these things in detail. So if I just give you a brief about the CSR activity, right? So this is something which is mandated under section 135 of Companies Act 2013, where there are some companies, if their threshold limit exceeds a particular thing, in especially their turnover exceeds a particular threshold limit, and also if there is net profit, right? So they have to spend their at least 2% of the net profit on the CSR activities. Now these activities could be in the form of giving some donation, it could be in the form of education, it could be form of medical facilities. So there can be different forms of the CSR activity. So the question was like whatever the purchases I am making to provide these CSR activities, whether I am eligible to claim the input tax credit on certain purchases, because I anyhow have to make the payment to my vendors and they are anyhow going to charge the GST on top of it. So whenever they are charging the GST on top of that, point was that can I go ahead and claim ITC? So the one part, obviously there was a lot of conflicts on this particular scenario. So whenever we talk about claiming of ITC, the first important thing is that whether we are using it for our business or furtherance of business or not, right? If I'm using it for my business and the furtherance of business, then yes, I can claim ITC provided it is not covered under section 17(5) and I have fulfilled other conditions of section 16. So if I have done that particular thing, in that particular case, I was allowed to claim the ITC. But now when we look into the other things, right? If we even go to the income tax. So under income tax, they say that whenever you are making any expenditure because of the CSR activities, they will not, this particular thing will not be allowed as an expenditure, because this is something that you already have some net profit. Out of that profit you are doing some social activities and it is using for that. So here this should not be considered as your expenditure and this is not allowed under income tax. So the one view over here was that if under income tax this is not even allowed as an expenditure, so will not even consider it is for the purpose of my business, and ultimately I should not be allowed to claim any ITC. But there can always be a different view, because whenever we talk about GST, we always say that it is used for the business or the furtherance of business. And we have never defined that what exactly we means the furtherance of business, right? So if we don't know the furtherance of business, the point was that whenever I am doing my, especially when I'm doing my CSR activities, right? So in such case, since this is mandated by the law, it is not a voluntary kind of things, right? People do voluntary also, but at the same time it is mandated by the law, it is mandated by the Companies Act. So question was always that if it is mandated by the act itself that I have to do or perform this activity, and ultimately this also helps me in growing my goodwill, because if I don't do the CSR activity in that particular case, I have to put this in my board meetings, I have to put clearly that I have not done the CSR activities. So in such case, if I am doing this, it helps me in growing my goodwill. So if it is helping in growing my goodwill, then the question comes in, then it is actually for furtherance of business, because that helps me in growing my business too. And if it is for growing my business, so ultimately, and it is not covered under section 17 subsection 5, which mainly talks about the block credit, then I should be allowed to claim the ITC, right? So there was always two views to it. At one view, we say that we are not allowed to claim ITC. The second view was that we can always claim the ITC. There were a lot of judgments which happened, especially when it comes to the ITC on the CSR activity. So now, to avoid any confusion, what they have done in this particular budget, they have clarified that if you are doing any activity, the CSR activity, then the ITC on the same will not be allowed. This particular thing is now covered under our section 17 subsection 5. So under section 17 subsection number 5, they have introduced this thing, and after introducing, because now they have added clause FA, which is obviously proposed to be inserted under section 17 subsection number 5, where they have restricted the availability of the ITC in respect of the goods or services or both by a taxable person which are used or intended to be used for the activity of corporate social responsibility as provided under section 135 of the Companies Act 2013. So after they have added this line in section 17.5, which is more of a block credit where we cannot claim the ITC, what will happen? I will not be allowed to take any ITC if I am performing any CSR activities and I am getting any input, right? Earlier we used to say, okay, it is my input service or it is my input good, so I should be allowed to claim the credit because it is for my business and the furtherance of business. And this is not covered under section 17 subsection number 5. I have fulfilled all my section 16 conditions also, so I should be allowed to claim ITC. But now we cannot take that stand because ultimately they are planning to put this under section 17 subsection 5. And if it is coming under there, then I will not be able to claim any ITC on the CSR activities, right? So what will happen after this, once this is introduced, because obviously this is in the budget right now, it has to be notified separately. Once this gets notified, in that particular case, we will not be allowed to take any ITC on the purchases we have made for the CSR activities. So this was the first and the foremost, I think, and very important change, because this is going forward. If this gets notified, then the cost of our business can increase, because whatever the purchases we are making and whatever the taxes we are paying to the supply in respect of this activity, there I will not be allowed to claim the ITC. And if I'm not allowed to claim ITC, this becomes my cost. Now, once this was the first and the foremost one. Now, the second important change, and this is especially the good thing for the composition dealers, especially. Today, if we ask about what exactly is this composition scheme, right? So under the GST, we know that we do have one composition scheme, which is a kind of simple thing where there are the small taxpayer who can always opt for this scheme. And once they opted for the scheme, it's for them, the GST filing process is very simple, right? They just have to file a form called CMP-08, then they have to file GSTR-4, which is an annual return, and CMP-08 is also a very small form. There, they don't have to worry about ITC and all. They don't have to worry about their supplier filing on time or not. They have to flat pay the taxes on their turnover, and the turnover when they pay the taxes is just like 1% or depending on that 6% or 5%, depending on the type of activities they are doing. So, right, it's a very simple scheme which was introduced to make sure that at least the small taxpayer or the small businesses can always go ahead, register under GST, and then for them, the filing process should be very simple, right? Now, whenever we talk about this composition scheme, obviously there are a lot of conditions which is attached to it. It's not like everyone can go and just go for the composition scheme. Now, when we talk about the conditions, right? Whenever we talk about the composition scheme, like who all can go under the composition scheme, there's a limit of turnover, right? If my turnover is up to 1.5 crore, in that case, I can always opt for the composition scheme. But there is not only turnover, there are some other conditions also. And one of the condition is, if I have taken the registration as a composition dealer, in that particular case, I cannot operate through an e-commerce operator. Because the reason why they even said that was that whenever I am a composition dealer, I assume that I'm a very small dealer. I cannot make any interstate supply. I will only be restricted to my intrastate supply. If I'm a small dealer, obviously I don't understand about all this thing. So if I'm registered, let's say in the state of Karnataka, in that particular case, I will be only dealing, or I will be only supplying this goods or the services depending on like which composition scheme I have opted for. So if I am dealing with the goods, I will be supplying this good within the same state. I will not supply in a different state, right? So if that is the case, in such case they have obviously opted for the composition scheme. And whenever we say online, right, if they want to go online, and today we do have a lot of platforms like Amazon, or there's a Flipkart, there's Meesho, right? When they want to go online, most of the time you may get order from different states. Okay, so when you get orders from different state, you have to supply to the different states, so the transition can be actually interstate. So they had provided a condition that if you have opted for the composition scheme, then you cannot operate through an e-commerce operator. So that was a condition. But now they have relaxed that condition. So they have changed the wording over there. And now what they're exactly saying is that even if you have opted for the composition scheme, still you can go ahead and operate through an e-commerce operator, which means you can supply the goods through an e-commerce operator. So this is a good move, I would say, because now there would be a fair play, right? Like they can go online also, as well as they can deal in the offline space too. Right? As we know, right, when it comes to the businesses today, most of the businesses are moving online. They want to, even the customer, when we think about, most of the people have started purchasing online. So it becomes very good part if the people, a small taxpayers, or I would not say taxpayers over here, small businesses also go online and can sell their goods online, right? So now they can actually register on this e-commerce operator, I would say on this e-commerce platform, even if they have opted for the composition scheme. But one important part which we should understand over here, that this composition taxpayer can make supply of goods, but not the supply of services. If they are into the services wala business, in that particular case, if they have opted for the composition scheme, then they cannot go with the e-commerce operator, right? So this particular thing applies for the people who wants to register on, let's say, Flipkart or maybe Amazon or Meesho, right? If they want to register themselves over there, in such case they will be allowed, and they can always opt or register themselves on this platform, even if they have a registration under the composition scheme. So this was the second important change when we talk about this particular budget. So they have introduced this, and I think this is a really good move. Here now people will always be able to register themselves, because today they were not able to do that, right? They were not able to register, so they don't want to go with the normal scheme. They want to be in the composition scheme, but at the same time they want to supply their goods through this e-commerce platform. So earlier they were not able to do so, but now they will be able to do that. So this was the second change. Now the third important change. Hey, this is also a really very important change, because there were a lot of confusion which was happening. So let me first give you a brief about why this change was even needed, right? So today, if we just talk about, we know that there is a GSTR 3B filing process which we follow today, and especially there is one thing called table number 4, right? And when we talk about table number 4, they have divided this GSTR 3B table number 4 into 4 parts. One is table number 4A, then there is table number 4B, then there is table number 4C, and then there is table number 4D. If I talk about 4A, it talks about all the ITC which you have claimed, right, which you want to claim. The table number 4A is an amount which you are claiming. Table number 4B talks about all the reversals which you want to do, right? So 4A is a claiming, 4B is a reversal, then 4C is nothing but it's just a net figure. When I'm saying it's a net figure, it's a 4A minus 4B is a 4C. That is the actual ITC which you are going to claim, and it is going to sit in my electronic credit ledger, right? So 4C is an actual amount which I am going to claim, and is going to sit in my electronic credit ledger. And then we do have 4D, which is more of a disclosure thing, right? I have to disclose to the government that, okay, if there is some ITC which I had reversed in the previous year, but now I want to claim it, I will show that information in 4D. Similarly, if there was some ineligible ITC because of the difference of place of supply, which means if there's an interstate transaction, but my supply obviously have charged CGST, HST, and my state is different, I'm registered in a different state, then that particular transactions comes and sit in my 4D. Right? Best example could be in case of Vimal property, right? Where let's say if I have visited Delhi and there I stayed in a hotel, but I am registered in the state of Karnataka. So that person, the supplier, would have charged CGST, HST because of the place of provision, the place of supply provision. But since I am registered in the state of Karnataka, because my GST belongs to 29 state, I'm not allowed to take the ITC on such transactions. So this is a kind of an ineligible ITC. And even if we look into our GST 2B today, it has been divided into two parts. One is ITC available, the another is ITC not available. So this comes under the category of ITC not available. So that has to be shown in table number 4D2. Similarly, if there's something called time bar thing, right? So we all understand that the maximum ITC which we can claim for any year is till my next year, I would say the next year October filing, which is till 30th of November. So that is the maximum time when I can always go ahead and claim ITC. So if it is beyond that, right, if some ITC my supplier has filed, let's say on 1st November, I will not be allowed to claim ITC on such thing, right? So that also has to be disclosed in table number 4D2. So this was just a reference. Like if we look into GSTR 3B, right, I talked about some reference where I'm saying there is 4A, there's 4B, there's 4C, there's 4D, where we have talked about claim reversals, then net ITC, and then some disclosure part. So here, when we focus especially on 4B part, right, in GSTR 3B, if we look into the 4B, 4B is further divided into two parts, which is 4B1 and 4B2. When I look into 4B1, it mainly focuses on the permanent reversal. Whenever you have some permanent reversal, that goes and sit in 4B1. If you have some temporary reversal, that goes and sit in 4B2, right? If temporary, what exactly we mean by permanent reversal and what exactly we mean by a temporary reversal? I would give you a few examples of permanent reversal. For example, whatever is coming under section 17, subsection number 5. Let's say I purchase a motor vehicle and I'm not into a business of transportation of goods or services, or maybe the furtherance of the business, the same business. In that case, I cannot claim the ITC on that, right? So that's a kind of permanent reversal. Or maybe I purchase something and that is for my personal consumption. It's not for my business purpose, right? In that particular case, I can't claim ITC. So this is a kind of a permanent reversal. Like whatever is coming under 17.5 becomes permanent reversal. So what the government is saying, that if there is some permanent reversal which was first appearing in your 2B, so first you go ahead, show in 4A5, and then you do a permanent reversal under 4B1, saying that, okay, I can't claim ITC on this particular ITC. So ultimately your 4C becomes 0 in such case. That is a permanent reversal. Or maybe I can give you a second example of the permanent reversal where, let's say, because of 42, right? Section 42, which means if you have some purchases and you have some supplies, when we talk about your outward supply, right, you are dealing with both the exempted and the taxable supply. So we all understand that whenever I'm doing both the taxable and the exempt supplies, in that case, the common input or input services which we have made, or even the capital goods, if you talk about Rule 43, in that case, I cannot claim the entire ITC. I have to reverse some ITC. Right? So when I have to reverse some ITC, that is also kind of a permanent reversal, right? So that information we always put in table number 4D1. But then comes table 4B1, right? So in table number 4B1, we show the permanent reversal. But then we have table number 4B2, which talks about temporary reversal. And when we're talking about temporary reversal, the one reasons we understand is that, okay, there was a supplier, shown the invoice in my GST 2B for my current return period, but I have not received the goods. If I have not received the good in that particular month, which means I cannot claim ITC, because one of the condition of section 16 that I should have received the goods or the services, right? In this case, I have not received the goods. So then what I'm going to do, I will put that information in 4A5 and then I will do a temporary reversal, which means in 4A5, I will show that amount. And then at the same time, I will show that amount in table number 4B2, which is a temporary reversal. I'm like, okay, there is no problem. Then what exactly is this change? What are they talking about? So there was, from this particular perspective, this was correct. When I go to the next month, right? When I used to go to the next month, what they're saying, whenever you're doing a temporary reversal, in such case, now when you reclaim that ITC, right? Let's say in the same example, December month, I have done some temporary reversal. Now in January, finally, I received the goods and the services. I will be allowed to claim ITC. There was no problem. In 4A5, I told, okay, I want to claim the ITC. I have claimed it also. But the main government intention is what they are trying to do, that the 4A5 value should ideally match with the amount which is coming in my 2B. But in this case, this will not even happen. Why it will not even happen? The reason why it will not happen, because I have claimed some ITC which was related to my previous year, which I had reversed earlier. So here in such scenario, the government says that at the same time, you also show this value in table number 4D1. Right? When you show this value in 4D1, I will understand that the value which is coming in 4A5 should be actually the sum of the value which is coming in 2B and the value which you have shown in 4D1. So this is one of the way how the government is going to track what is the ITC you are claiming and what is the ITC you are reclaiming. So in this case, the bigger problem was coming in respect of the reversal because of 180 days. We know that there is also one another condition, right? There was one proviso which was given under section 16 subsection number 2, where in case I don't make the payment to my vendors within 180 days of the issuance of that particular invoice, in such case I have to do the reversal. I have to do my ITC reversal. And when I have to do my ITC reversal, whenever then in future I claim or I make the payment to my vendor, I can always reclaim that ITC, right? That was the condition. What we used to say that I have to make the payment to my vendor within 180 days, right? If I don't do that, then the ITC which I have claimed on that particular invoice, I have to reverse that ITC. But in future, I can always reclaim that ITC if I have made the payment to my vendor. Now the major problem which was coming was that the wording which was given in that particular proviso, right? There was a second proviso to section 16 subsection number 2. So the major wording they have written was that it should be added to his output tax liability. That was the wording which was given. But when we look into GSTR 3B form, if I say that it should be added to my output tax liability, then ideally I am going to put that information in my table number 3. Because majorly my table number 3 talks about the outward tax liability, right? It does not, the table 4 is mainly in respect of the ITC, right? The ITC reversal and all that thing. But if the wording used over there was that it should be added to his output tax liability, I should be doing in table number 3, but that was not the case when practically I filed my GSTR 3B. So in this case, what they have done, they have changed the wording, right? So what they have clearly mentioned now that the recipient is entitled to because ultimately the recipient is entitled to reclaim the ITC, right? So they have just changed the wording over here, and wording they have changed in the way that instead of writing that it is to be added in the output tax liability, the wording which they have changed is in a way that it is proposed to be amended to clarify that the now recipient is entitled to reavail the ITC on making payment towards the value of supply along with the tax which is payable to the supplier. So that is how they have changed the wording, which means ultimately you can show that ITC reversal amount in table number 4B2 of GSTR 3B, and whenever you want to reclaim that ITC, right, whenever you actually make the payment to your supplier, in that particular case you can always show that value in 4A5 as well as in table number 4D1. So this is more of a, I would say, the problem which we are facing practically and theoretically, right? Theoretically there was some wording which was given, and practically what we were following was little different because that is how our form was built in. So just to make sure there is a consistency between both of this, they have come up with this small change. It was just a change in a text, but it is a very big implication when it comes to the filing of our GSTR 3B form. So this was like another important change when it comes to the alignment of this ITC reversal because of 180 days condition in our GSTR 3B, like how exactly we would file it. Now the next important change. So the next important change is in respect of the high CSAs. Now, if you ask me about this high CSAs, right, like what exactly we mean. So this is in respect of the credit where we actually do the supply of this warehouse goods before the clearance of the home consumption. So we do understand that we have schedule 3, right? So we do have a schedule 3 where it actually talks about the activities or the transactions which are treated neither as a supply of goods nor as a supply of services, right? So we do have schedule 3, which actually talks about the transactions or the activity which is treated neither as a supply of goods nor as a supply of services. There was one entry, right? There was one entry which says that this is neither a supply of goods nor a supply of the supply of services, and that entry was in respect of this high C sales, where they clearly say the activity of the supply of this imported warehouse goods before the clearance for the home consumption, right? Before the clearance of the home consumption will be treated neither as a supply of goods and nor the supply of services. And the reason why they always say that is because the person actually pays the taxes, right, at the time they file the bill of entry. So whenever they will clear the goods, they will file bill of entry, and at that particular time they will pay the import duty as well as they will pay the IGST on that. So that was something which was already there. Then what exactly is the change here? Why they have even made such changes? So we understand that if we talk about this, right, today we do have section 17 subsection 2, right? So there is a CGST Act where we have section 17 subsection 2, which actually restrict the availability of the ITC to the extent it is attributable to the taxable supply, right? Which means if I am making both the taxable and the exempt supplies, I can claim the common ITC only to the extent it is related to my taxable supply, right? But here, if we just talk about this part, this does not cover the activities which is there in schedule 3, right? So I don't have to reverse any ITC which was attributable to the items or the things which was coming in my schedule 3. But now what they are saying, they have given an explanation to section number 17.3, which provides that it's exempt supply for the purpose of this value, right? It actually in general, right, in general it excludes the things which is coming in schedule 3. So in general it used to exclude it, so there was no problem. But now what they have done, they have introduced this part, right? So in such case what they're trying to do, that if we talk about the activity, especially the high C sales, they're saying this will be considered as your exempt supply. If this is considered as an exempt supply, then our rule number 42 and 43 comes into the picture, which means when I'm saying the rule number 42 and 43 comes into picture, then since it is considered as an exempt supply, then whenever I am supplying this, I have to do the corresponding ITC reversal. So whatever the purchase is, the common input I have to do the ITC reversal, right? So this was like a next important change, where especially for the purpose of reversal of ITC as per rule number 42 and 43, we have to even consider the value of supply of this warehouse goods to any person before the clearance of the home consumption. So this is now going to be treated as an exempt supply. So earlier it was covered anyhow, now also it is covered as a part of schedule 3. So when we talk about it was covered as a part of schedule 3, we never used to take this as an exempt supply, right? We never used to do the reversal under rule number 42 and 43, but now we have to do the reversal under 42 and 43. So which means it will again increase the cost for the businesses. So this was like another change which the government have proposed in the budget, where they are going to add this. Now if you ask me about the next important change, though if we just see practically, if you just see, you will not see much implication of this, but this is like another important change which have come up with here. What they are exactly doing, like today if you ask me, if I have to file my July 2017 return today, right, can I do that? Let me ask you all this question. Today if I want to file my July 2017 return and I have not filed till date, can I file it today? So you can reply on the chat box. If I want to file my July 2017 ka return today, can I do that? I could see answer from Ramanan. Ramanan says yes. Vijay says no. What about others? Somna says no. Okay. Pooja says no. Okay. So I am getting different answers. So today, if you ask me now, there is no such condition which is there on the government portal. Which means if I have to file my any pending return, which could be GST 1, GST 3B, GST 9, GST 8, I'm allowed to file the return. There is no restriction there. Even if today I want to file my GST 1 3B, I can do that if I have not filed it. Right? So I am allowed to file. But most of the time, what you will see, that we all know that the proper officer have the power, right? That if you have not filed your GST1 within, which is a continuously 6 months, right? So till the continuously 6 months, in that particular case, they will obviously issue you the notice and they will cancel your registration itself. So when they cancel your registration, so obviously after cancellation you will not be able to file the return unless they revoke that GST registration, right? So that is something which we have seen practically, and that actually happens also. So which means if we talk about 3 years, right, so it's a very huge time. So before that, anyhow you are going to receive the notice, they will cancel your registration there itself, and if they revoke, then only you will be able to file. But they will also, like, they will always allow you only when you actually go ahead and file your returns. So in this case, but obviously there should always be an upper limit, right? As we have in income tax also. So there is always a timeline to file any return. It cannot be endless. So same thing they have introduced under GST also, where they are saying in respect of your GSTR1, your GSTR3B, your GSTR9 and GSTR8, any pending return can be filed only up to 3 years, right? So from the due date, so if I'm saying there's a due date for GSTR1, which is normally it's like 11th of the next month, and if you're saying the due date for GSTR3B, which is normally the 20th of the next month, if we talk about GSTR9, it's normally the 31st December of the next year. So if that's the due date, so from that due date, within 3 years, you should file all of your GST return. If you don't file it, you will not be allowed to file any return. So here, this is like another thing which has been proposed, and I think this is a normal thing which ideally should be there. There should always be an outer limit. There should always be something, a timeline till then which you should do certain activities. So this is something which is now introduced, and this is already there in other laws. So here under GST it was not there, but now they have also introduced in GST, where they're clearly saying that any pending returns can be filed only up to 3 years. Now this is a more of a clarity, I would say. And when I'm saying clarity, today there was a lot of confusion which used to happen. And if I just talk about the confusion, right, we do have one section called section 22, right? So under the CGST Act, we have section 22, and this section 22 mainly talks about who is actually required to take the registration, right? It talks about that condition. Then we do have section 23, and when we talk about section 23, it exempts the taxpayer, right? It exempts a person from actually taking the registration under GST. So 23 mainly exempts the person from taking the registration, and mainly the example could be agriculturist or a person who is only into the exempt supplies. In that particular case, they don't have to take any registration. Then we do have 124, right? 24 is mainly in respect of the mandatory registration. So the taxpayer who have to take the mandatory registration, that is about 24. So we used to understand that, okay, if we talk about 23, anyhow 23 will always override section 22, which means if in 22 my threshold limit is beyond, or my turnover is beyond the threshold limit, and I am required to take a registration, but I am into an exempt supplies only, I will not take a registration. Right? Which means ultimately our section 23 overrides 22. So there was no confusion. I think everyone was very clear about it. But the confusion was about this mandatory registration. The question was, I will give you a very simple example. Think about, I am into an exempt supplies. I am into any business where I am only doing the exempt supplies. Right? There is nothing taxable. Now I avail the GTA services. I purchase something from GTA, it's required for my business. So I avail some GTA services from the transport, my transportation of goods and all, because anyhow I'm into the exempt supplies. So now the problem which was happening was that, and now assume that this GTA says that, okay, you have to pay the taxes under reverse charge. Because we know that there's a scheme which has been opted that under one part we have to take the, especially here, if we just talk about the GTA services can be under the reverse charge also. So I am into a business where I am doing all my exempt supplies. So when I'm doing all my exempt supplies, I was not liable to take any registration under GST, even if my turnover exceeds the threshold limit. There was no problem. But when I used to go to my section 24, under the mandatory registration, there was one condition which was added over there. And when we look into that condition, they were saying that if you have to pay the taxes under the reverse charge, then you have to take the mandatory registration. Now the question was, in this particular case, I am into my exempt supplies, but because I have availed my GTA services and I am assuming it is covered under the reverse charge, do I have to take the registration under GST? Because when we look into 24, it clearly says that you have to mandatorily take the registration. So this was the confusion which was happening. Now what they have clearly, and there's a clarity which has been given, that if you are covered under 23 where you are exempted to take any registration, then you don't have to worry about section 24, which means in this case, even because of the reverse charge provision, you have to mandatorily take the registration, you don't have to take any registration. And I think this is a very important thing, and it is going to be a beneficial for the taxpayer who, just because of one of the two services which were availing, which was covered under reverse charge, was required to take the registration. So now they don't have to take any sort of registration. So this is a kind of a welcome move, and this is going to have a retrospective amendment. So this is something which is great for any businesses. So this was like a one change. Now let's talk about the other one. So what they have done, especially from the prosecution perspective. So today, if we just talk about the prosecution part, right, there's a threshold limit to it, which is 1 crore. And if the tax amount which is evaded, right, it's more than 1 crore, in that particular case, the taxpayer can be jailed, right, because it is considered a criminal offense. So in such case, they have increased this limit. So they have increased this limit from 1 crore to 2 crore, but it's not applicable for the fake and the bogus invoices. So this is again, I think, a good thing, because today, if let's say, even if I have done something wrong and it was not intentional, there was something which happened by mistake or something, but they are saying that this is a limit, right? So there was a lot of problem which was happening. Now with increasing this limit, I think this is a helpful thing for any genuine taxpayer, at least, because they will be like, okay, even if they have done something, they can always rectify it. Now, other than this, if we talk about the criminal offenses, right? Today, there is a list of the criminal offenses, and there are some points which is given that this is considered as a criminal offense. And we all understand that if something is coming under the criminal offense, the result of this could be directly going to the jail, right? So if we talk about that, this is something which was there. But now what they have done, this is again a good thing, for at least for the governance perspective, where they have reduced that list. So there were three main activities which was coming under the criminal offense, but now they have removed that three things, so which will not be now considered as a criminal offense. And that three activities was preventing officer. So if you used to prevent the officer, then it was a kind of criminal offense. Now it will not be there. Second thing was about the tampering the evidence, and third was about the non-supply of information. So if you don't supply information right on time, then it was considered a criminal offense, but it could be a genuine thing, right? I was not able to supply the information just because there was something happened at my business, right? So in such case, earlier it used to be a criminal offense, but now they have removed that from there. So this becomes a kind of decriminalized, which means no more a criminal offense. So this is something which is good from like a business perspective also, because otherwise the implication of that, right, if something is considered as a criminal offense, the implication of that was very trivial. But now with this, I think it's a kind of a good thing for any taxpayer. Coming back to the normal thing, right? If we think about GST, we would actually understand like what exactly the government intention is, what government is even trying to do it, right? Today, if you ask me, we keep on saying that, okay, the government come up with GST, then government come up with that e-way bill, then government come up with the e-invoicing data, then they had was obviously income tax was always there. Then there was some linkage between the income tax and the GST, where automatically the GST turnover details which we file in GST automatically goes and sits in AIS report in our income tax. We understand that there is an IceGate portal, and when we look into the IceGate, that IceGate information also gets reflected in my 2B in respect of the IGST which I have paid at the IceGate. So more or less, if we look into the government, right, they are trying to link all the portals. They are trying to link the income tax, the GST, the IceGate portal, even the information they're fetching from the Companies Act. Even if we look into it, today if I just sell some shares, right, or I sell some mutual funds, that information also comes and sit in my AS report. Right? So there is a kind of a linkage, and the government have lot of data. what the government is actually trying to do is that with this particular pan, like what is the corresponding data, right? Today, if I want to see the GSTN which is associated to the particular pan, I can always do that, right? I can use the functionality of search expert and I can get the list of the GSTN. Even when we go into the tedious part, right, there also I have to even give pan number. So there is a 10, but I also have to give a pan number. If I have to do a company registration, the pan number is always there. So in this particular budget also, if we look into it, they have clarified that pan will become a unique key for any person, and I will link entire data with this particular pan. So entire data will be there, and there will also be a functionality of DigiLocker where your entire data you can save it over there, right? Even if you have something like Aadhaar card, PAN card, you want to put every information, you can put that information over there. So intention, we understand that the government is trying to have all data, link all the data. So at the same time, when the government says that, okay, I already have your most of the data. So if today I'm generating the IRN number, which means I'm sending this information to the IRP, which means ultimately the government have some sort of data, right? They have an invoice level data, which is a lot of data, right? They know what item I'm selling, at what price I'm selling. They already have that information with that. When we talk about GST1 also, they have a transaction level data, right? Whenever I even file 3B, they know whatever the ITC I am actually claiming today, right? Even when I look into the income tax returns, there also they have some data. So they do have a lot of information. And even when I file for registration, right, I do the GST registration, they have my addresses and other information. So if they already have the information, the question comes in, let's say tomorrow I have to go and take some loan. I'm in a need of loan, right? When I'm in a need of loan, I have to take the loan against doing my some business activity. I want to get some cash credit limit, or there could be some other kind of loan, or maybe I have to get some invoice discounting. Government already know the genuineness of the data which is there on the GST portal. I have generated proper invoicing. My goods actually moved from one place to another. There was a proper e-way bill generated. I also have shown that information in my GST 3B. I have also paid the liability in my GST 3B. All these transactions was already there. So today, if I have to take any loan, I have to share, I have to download all this data, prepare some sort of balance sheet, and I have to share that information with the bank or maybe any person who is actually giving me the loan. So the government now says that since this data is already available with me, you just do one thing, you just give me the consent. After you give me the consent, I will automatically share this data with the other parties. So whenever you give me the consent, I will share this information with the party you wanted. Right? So this is a kind of, so if this happens, in that case, I don't have to keep on downloading, collating all data and then sharing. Rather, the data can be accessed directly by the person. So if there's a bank, right? So bank can directly get the data from the portal itself. So they don't have to get this data again from you, collate that data and then look into that, because in that way there would also be the they don't have to then verify the data again, because many times if you are sharing, then bank also have to look into it whether each and every transaction is correct or not, and whether it's genuine transactions or not, right? So if they can directly access the portal and get the data from there, the genuineness of the transaction can be seen from there itself, and they can use that and accordingly even give you the loan on time. So this is like another thing which will actually help the financial institutions in even giving the loan and paying the loan on time. It will help the taxpayer in getting the loan on time, right? So many times because of the delays and because of a lot of procedural work, they are not able to get the loan on time. So this is another thing where the government have come up with, where the government of the, like, they are actually saying if they can share the information of the taxpayer to the third party after their consent, right? So once they give the consent, that can be shared. Other changes in respect to the place of supply in case of transportation of goods to outside India. So if we just talk about the proviso, right? So if we look into section 12, subsection number 8, which actually talks about the place of supply, and it talks about that the place of supply will be the destination of goods in case of the export of goods. So we all understand that as per section 12.8, the POS is the destination of goods. But now what they are saying, they have just removed, they have just deleted this particular proviso. So once they have deleted, it will signify that the place of supply will now become the location of the recipient. Though there won't be much impact on that, because for this particular transaction especially, right, they have very clearly told that the ITC will be available and there won't be any problem. So it's just they have just changed the place of supply to just avoid all the disputes. So this was like another change which has been made. Now, after all this, right, the important part, because we keep on talking about a lot of things, and I think we have already considered a lot of points. The one of the important point which we would have seen, right, the government is trying to catch hold on the bigger enterprises so that they can catch hold the smaller businesses. And how exactly they are trying to do, right? They all understand that if there is a bigger enterprises who is purchasing from the smaller dealers, right, they are just catch holding on the bigger enterprises, are they availing ITC or not? Because if they're not able to avail ITC, obviously they will not make the payment to the small vendors and all. That was a one way of doing that, where they have just catch hold on the bigger thing, and automatically all this will automatically come into play. In the same way, if we talk about an e-commerce operator, they understand this, all e-commerce operator will be compliant, they will follow all of the rules and all, right, they will follow all the provisions of the act and all. Today if we understand that most of the time we would say they have actually put like this information to the, or they have kept lot of responsibility on the e-commerce operator. I'll give you a few examples. In lately, if you would have seen, right, this e-commerce operator, for example, in respect of restaurant services, if there is some restaurant services which has been provided through this e-commerce operator, then the government have kept this entire liability on this e-commerce operator only, and they said like you only are liable to pay the taxes, rather than this restaurant people, because they understood that most of these restaurant people were not even paying the taxes. So what they have done, they have kept the entire liability on the e-commerce operator, and they said that you are now liable to pay the taxes. So they introduced one condition on 9(5). Similarly, if we look into the examples of, let's say, Ola and Uber, right, the where they are drivers, and they again understand, okay, this driver will never be able to pay the taxes to me. So in this particular case, what I will do, I will put this entire liability again on this big giants, which is e-commerce operator, and let them only pay the taxes to me. So again, against this liability, they have asked them to pay the taxes. So under 9(5), they pay the taxes. So the Ola, Uber itself will pay the taxes. So here, there was certain thing. This is one way where they will ask the e-commerce operator only pay the taxes, but there can be second way also, right? Today, if we take an example of Flipkart, or maybe we take an example of Amazon, in that particular case, what usually happen, they are the suppliers, and these suppliers actually supply their goods through this e-commerce operator, and then obviously it will be sent to the customer. So obviously there would be an order which will be placed by the customer on this platform. They will redirect that order to the supplier, and then supplier will give this good back to the customer. Here, to track such kind of transition, the government come up with an, I would say, a section which is called TCS section, which is section 52. Where what exactly government says that whenever there's a transition, such kinds of transition, because government want to track all this transition and government want to track all these suppliers, what they have done, they said, okay, you now collect the TCS, right? When you collect this TCS, in that particular case, this persons will report this information, the turnover in their GST1, and when they report and there's a difference, if the turnover which has been shown by you and the turnover they're reflecting, obviously there can be difference because they can have other sale other than this e-commerce sale, but obviously it cannot be less than that. It can be more than that, there is no problem. But if it is less than that, that means there is a problem, right? So in such case, they have kept the responsibility on this e-commerce operator to collect this TCS, furnish their GST rate. By looking into the GST rate which is filed by an e-commerce operator, the government can actually track all the suppliers and see if they're actually furnishing their GST1 correctly or not. And if they're not even registered, right? All of this, they can do it. But now there is some additional liability again they're going to put on an e-commerce operator, where they're saying that, okay, you are really doing a good job, there was no problem. But now what they're saying, that if you see that there's some unregistered person who are registered on your platform, then you are liable to check that. You should not allow any unregistered person to register on your platform and supplying the goods unless I gave a permission where they were allowed, where the unregistered person were actually allowed to deal with your platform. So if it is allowed in the law, there is no problem. But if it was not allowed and they are unregistered person, in such particular case, you should check that. If you don't do that, then you are liable to pay me the penalty. Similarly, if you think that, let's say, because now I'm going to bring the composition dealer and I'm allowing this composition dealer to deal with your platform. So if I'm allowing this composition dealer to deal with your platform, But if they are making any interstate supply, which they are not allowed to because they have opted for the composition scheme. So if they're not allowed to make that, if they're doing that, then again it's your responsibility that why are you even allowing that, and in such case again you will be liable to pay the penalty, right? Similarly, if they're not furnishing the correct information as per section 15.2, that you will be again liable for the penalty. So these are the conditions which they have kept, where they will catch hold on this e-commerce operator, and they want the e-commerce operator to make sure this compliance actually happens, right? So this is like a one of the another way where instead of looking care or taking care of all of the suppliers who are registered, they are just catching hold on the e-commerce operator, and they're asking them to follow the law so that they can automatically make sure that this compliance happens in India. So this was like another change which actually happened. In the same way, they have also made the changes in the definition of OIDAR. When I'm saying OIDAR, right? So there they have made the changes in this definition, where if you ask me what exactly had happened, so they have just removed from the definition the government, they have included some government authorities and all. So they have added that wording over there. So this is something which they have changed it in the definition itself. And but the only the bigger, like if we just look into the normal part, right? So they have done that part, but still if we look into it, like if there is some purchases from an unregistered or by the unregistered person, still if this is actually considered in a OIDR services itself. So definition of OIDR still actually talks about that. So that is something which is there, right? So this was just a change in an OIDR definition which they have done. So I think we actually discussed a lot of things when it comes to the GST, the indirect taxation, right? Where we just talk about what government have come up with. And if I just summarize, like what actually had happened in this budget, we'll also talk about income tax, right? We'll also talk about a brief about the changes which was given in the income tax. But in general, if you ask me, जिसको हम बोलते हैं मोटा मोटा क्या चेंज था, right? From that ITC angle, what they have done, one thing they have clearly mentioned that CSR activity. So any input or the input services for the purpose of the CSR activity will now not be allowed because they have kept this under section 17.5. The second important change in respect of the input was that, especially when we are talking about the ITC part, right? They're talking about the high C sales. So if you are doing any high C sales, then it will be considered as an exempt supply. And if it is considered as an exempt supply, then we have to follow rule number 42 and 43, and accordingly we have to do the ITC reversal because this will be considered as a common input, right? Whatever the common input we have to do the ITC reversal as per rule number 42 and 43. So this was a second change in respect of ITC. Then the third change was more of just an alignment thing because this was already there. It's just like there was a confusion which was happening when it comes to reporting on our GSTR 3B. So the third change was in respect of the 180 days reversal. So whenever we do the reversal because of the 183s, then now they have aligned in a way that you can actually report in table number 4B2. There you have to do the reversal. And whenever in future you want to claim it, you can always show that in 4A5 and under 41. So that's a more of an alignment change. I would say it's more of a clarification rather than any change. So this was the main three changes when it comes to the ITC. Similarly, if we talk about the composition scheme, right? For the composition dealer, now they're saying, yes, you can always go ahead and actually they supply the goods to an e-commerce operator. So they are allowed to take actually they can actually supply the goods to an e-commerce platform. But remember, this is only for the goods and not for the services. Then in respect to the pending return, be it GSTR 1, 3B, 9 or GSTR 8, there's a maximum time limit when you can actually file your GSTR returns, which is like within like 3 years from the due date. So the maximum time limit, like within 3 years from the due date, you can file your returns. You cannot file beyond that. Then there was a more of a clarification in terms of the registration, and I think this is really very important because there was a lot of confusion which was happening. So they're clearly saying that if you are exempted from taking the registration under section 23, in that particular case, even if you are covered under 24, you're not required to take any registration. Then there was a more of a changes from the threshold limits and all. So in respect to the prosecution, earlier the limit was 1 crore. Now it has been increased to 2 crore. They have removed some of the, I would say some of the items or the list which was coming under the criminal offenses. So now they have removed that. One was preventing officer, another was tampering evidence, and the third was from non-supply of information. So all these three has been removed from the criminal offense. So now they have removed that. This is something, this will actually kind of a facility which has been given, where they're saying that we already have certain kind of a data, we already have invoicing data, e-way bill data, the registration detail. So now I will give you a functionality where you can authorize, you can give the consent, and once you give the consent, we can share this data with the third party, which means let's say banks and all. So you can always share this data with the financial institution directly from the portal, so you don't have to download and then share this data. Then there were some few changes in respect to the place of supply. Then they have increased the, I would say, the penalty or the compliance in case there's a non-compliance which is happening through their platform. So they have increased that for the e-commerce operator. There's a change in the definition of OIDAR. So this was a more changes when it comes to the GST, which was introduced in the budget. But obviously, this all changes are subject to the notification. So this will become notified. So once this get notified, then only it has to be implemented. Before that, it is not. So this was more, or I would say, changes in respect of the GST. Now some of the changes when it comes to the income tax. So the one changes in respect of the rebate, right? Earlier there was a rebate under section 87A, and when we talk about the rebate under section 87A, there was a limit up to 5 lakhs. So now that has been increased to 7 lakh. But remember, this particular rebate, if you opt for the new tax regime, we all understand there are two tax regime which is there under the income tax. One is old tax regime, another is new tax regime. So this rebate has been increased to 7 lakh for the new tax regime. So if you opted for the new tax regime, then this limit is up to 7 lakh, which means if your income is up to 7 lakh, in that particular case, you don't have to pay any taxes. So this was, I think, one of the, I think it is good for people, right? So especially for the small, like the people who don't have much income or the middle class family. So if they don't, if they have income up to 7 lakh, then they're not required to pay any taxes. And I'm assuming obviously they have not done any investments on all, they don't have any HRA and all. So in such case, they can always go for the new scheme. Now, there were some items which have become costlier. There are some item which has become cheaper. Why? Because of the import duty. So what they have done, they have actually levied the import duties on some of the item, due to which this particular, especially if you look into the cigarettes, the silver, the bicycle, the electric kitchen chimney and all, this will become costlier because they have increased the import duty on that. And if you talk about cheaper, the television, the smartphone, the electric vehicle, the lab-grown diamonds, the lithium, in this case, this particular item will become cheaper because they have reduced the import duty on this. Then there is a change in the slab rate. And now when I'm saying there's a change in the slab rate, again, this change is in respect of the new tax regime and not the old tax regime. For the old tax regime, whatever the slab rate we had today, the same slab rates continue. But if you have opted for the new tax regime, in that particular case, this is a new slab rate, which means up to 3 lakhs, you don't have to pay any taxes. If your income is between 3 to 6 lakhs, then the 5% is the slab rate, or the 5% is the tax rate. If you have 6 to 9 lakh income, then it's 10%. Then from 9 to 12, that is 15%. From 12 to 15 is 20%, and if it is above 15 lakh, then it is 30%. So this is like a new slab rate which is applicable only if you have opted for the new tax regime. So when I'm saying the word opted, right, one more important part which we should actually understand is that here the government says your new tax regime will be by default. So by default, it will be new tax regime. If you want to go with an old regime, then you have to opt for that. Then you have to go for that. But by default, it will always be new tax regime for every taxpayer. And then there is some other changes. If you ask me, then there is a standard deduction of 50,000 which has been extended. If they have opted for the new tax regime, they have reduced the surcharge, and the surcharge has been reduced from 37% to 25%. They have reduced the TDS rate from your 30% to 20% if you have the taxable withdrawal of EPF, right? So if there's a taxable withdrawal of EPF, then the TDS rate has been changed over here. So in short, if you ask me, most of the changes which they have done is in respect of the new tax regime. So if you opted for the new tax regime, then there's a change in the slab rate. They have increased the standard deduction. They have reduced the surcharge, right? So all of this, they have even increased the rebate. So all of this has been done to promote the new tax regime. So their main intention is that people should go and offer the new tax regime, because there, if you look into it, right, that you are not allowed to take, you're not even allowed to take much exemptions over there, right? You cannot claim HRA, you cannot claim LTA. So they are trying to promote the new tax regime because people can then not like make a frauds and all, because we all understand like most of the people do some fraud when it comes to showing the proofs for the investment. So they don't want that, and that's the main reason they want to want people to go for the new tax regime. And at the same time, it's easy, right? It's an easy for the people to directly go ahead and file the return basis their form 16 itself, so they don't have to do or show much declaration here. So this was a major, I would say, summary of the entire things which was discussed in the budget. It was mainly what were the changes which they have introduced in respect of the GST, and what were the changes they have introduced in respect of the income tax. And hope you understand. And still, in case you have any queries, right, in relation to the points which was discussed, you can feel free to write to me or write to us at gstsupport@cleartax.in. So that's our mail ID, which is gstsupport@cleartax.in. So you can always write to us over here. We'll happy to answer all of your queries. And or you can even mail me at surbi@cleartax.in. So that's my mail ID. So I will be happy to answer any of your queries. Other than that, I know that some of you have asked for the PPT for today's session. So anyhow, you will get this PPT after this session, after the end of the session, on your registered mail ID. Still, in case you don't receive it, you can always mail us at gstsupport@cleartax.in. So that's our mail ID, where you can request for the PPT, and we'll surely will share the PPT with you. So with this, thank you very much. Thank you for watching the session. And we'll always say, if you can just give us a feedback in respect of how was the session and what topics you are interested in, so that we can take the session on the topics which you are interested in. Thank you very much.